Good morning. Today is Friday and it's another news day. Market opened about 4 minutes ago and we're going to check out the market. Morning, Honey Roy. Got a little bit different setup today. I'm again trading on my micros today. But the chart you're going to be looking at is my minis chart, because when I'm looking back and forth between, oh man, that would have been nice to be in. It's just, we just sat down here not too long ago. But I'm going to be executing off screen. We're going to see if that helps with psychology today. I really like talking through the market, talking with you guys. So let's see how this goes. We're going to be trading with 5 micros, and I'm going to be really reserved on my entries. All right, I want to show you guys. Look at this. This is the weekly chart. This just looks really nice. This is the weekly chart. We have this fair value gap right here. We skipped overnight. We just jumped above it. So with that, man, we're probably going to run this high, this weekly high. Let's see, weekly PDA, PWH, previous week high. We're probably going to run that, and it's subjective if we're going to run these or not. Not sure. We absolutely could go down. We have this giant green candle, a bearish order block right here. Threshold is about right here. So there's still reason we could be bearish, but I'm not going to be fully bearish unless we break this weekly. Let's drop down to the daily. Daily analysis. Here we go. We're redelivering off of this daily candle right here. This daily fair value gap, we wicked down into it, closed above it, wicked down into it a second time, and now we're pushing higher. That makes this weekly high a very probable area. That's just how I'm seeing it. So if we break it down into the 4 hour, that's a swing high with a 4 hour BISI. That just, it just looks too obvious. Now it's going to probably try to manipulate us out of it. So what we're going to be looking for is a reason to go higher. And there's just no reason for it to go the other direction right now. There's no reason. Let's drop it down to the 4 hour. And I do want to show something here. I'm going to jump over to another screen. Let me all right, let me do this here. If you go to oh, it didn't work. Let me add that screen here real quick. All right, so this is how I find out the news for the week. So if you go to Forex Factory and you go to their calendar, so today's Friday, May 10th, and we have 10 a.m. news. So it could be choppy until 10 a.m. So the thought is, unless there's a premium type setup, we need to probably stay out of the market till after 10 a.m. So we're going to be hanging out till then. I'm probably not going to take anything unless something just obvious just is screaming at me, and I'm not sure that's going to happen considering my past 2 days. I'm just going to be very cautious. Okay, so that's the 1 hour. 1 hour is redelivering from this bullish order block. We broke through the highs, and if we look left, there is no more PD arrays until we hit this swing high. Let's remove this this one right here. Yeah, until we hit this swing high is there. Now, the other option that I could be looking at is waiting until we hit this previous day high right here and then looking for a potential short. But we need price action to show us that it wants to go lower. So those are some of that's the higher time frame analysis. Let's go down to the 15 minute. 15 minute. What do we got here? I'm going to pull I've been studying quarters lately. So we got 9 a.m. Or no, that's wrong. We go to 18. 18 to 18. These are the daily quarters. So this is where we are as far as price goes. We are in the third quarter right now. We have our opening price sitting right here at the midnight open. Is that right? Did I get that right? Or am I on the wrong one? I'm on the... Oh, I'm going way too big here. We're just exploding higher. There's not an entry. I'm not interested in anything here. Today's 10 o'clock. Let's go down to 5 minute. That will be easier. All right, so 18. There you go. That should give us our proper... No, I'm a day past. Sorry, guys. I'm just looking at the wrong time here. All right, there we go. This is using quarterly theory. I'm just putting it on the charts because I want to study it more. I think there's stuff to learn with it, so we're just going to keep an eye on it. Green line is our true open or the market open at midnight. This should be midnight right there. And we are just exploding higher. So we had accumulation, manipulation. We're probably going to hit this buy side, and we potentially could see a reversal in the fourth quarter. So the idea is you have AMDX or XAMD, which is taught by Day. He's studied quarterly theory from ICT, and I really like it. I think it helps you just be more accurate in your analysis. So this, in my mind, would be AMDX. X is you could see a reversal in the fourth quarter, which begins at noon. So we have our morning session as far as expansion, and then you could see a reversal or a retracement over here. That's the higher time frame way of looking at it, but we're just going to see. Yes, I'm going to wait until after news before I do anything. I'm not interested in this pump higher, really. Let's go down to the 1 minute now that we have our analysis. I do like, I mean, look at this right here. It wasn't an ideal setup on my end. We have our low, we have our lower low, we break higher, and then right at open, what do? We hit this breaker, and then we shoot higher. Reason why I don't like it is there was not a fair value gap overlapping to the left of the breaker. That's why I would not have considered that. It's suspect to me. It works, but in my early stages of my trading career, like I said, I've been trading for ICT for a year, been overall trading for about 2 years, and I'm just not at the point where I've studied this enough. So we are going to miss out on that. And also you can see this 5 minute. Look how we fill in this 5 minute. It's the lowest 5 minute. And it fills it, and then it shoots higher. We leave this fair value gap here, but this fair value gap is below the breaker, which I like. I like to see that. All right, so if we go up to price action where we're at right now, this was just souped. This is called Institutional Order Flow Entry Drill, OF. I don't even know what the acronym is, but it's an institutional order flow entry drill where it taps into this fair value gap and then explodes higher. So if the question that people would ask me is, well, if you know that, why aren't you in it? Well, the reality is when it comes into it, I don't know if it's going to do it or not. You could put a stop loss below here and take that risk. That's just not the model I decided to trade. There's so many models with ICT. You just have to decide one that you want to trade, and then you got to stick with it. I'm sticking with the breaker right now. I'll expand it as I become more profitable in the future, but right now I'm just solidifying my profitability and being consistent in my trading and following my rules and my executions. So that's a long way to say it. I'm glad you pointed that out because I saw that breaker block and didn't consider it because of the news. Yeah, I mean, I'm looking for breakers everywhere. I probably look for breakers too much because then I overlook at the breakers and then I realize that, hey, you're probably overlooking it. All you need is one strategy. That is 100% true. True. So far, this is still suspect for an institute order flow entry drill. To me, to see it completed, you would want it to hit these highs. But again, we're before news. We're 13 minutes before news. Anything could happen. Yep, there it is. So it did work out. Things that I look at on this one. So for the institutional order flow entry drill, if you look to the left, you got an order block here, and you got a larger order block as well. So there's if in fact the draw of liquidity is this weekly high overlapping a 1 hour fair value gap, there's high probability that this is going to hold. But we got news in 8 minutes. I just stay out of the market. Yeah, there's a lot of different strategies out there. Doji's inversion gap, I like. I use it as a secondary. There is just, inversions can fail if you don't know. You can't. The same with breakers is you cannot just trade an inversion. You cannot just trade a breaker. You have to know how to read the market. And yesterday, I'll raise my hand, I did a poor job of reading the market. I did a horrible job of reading the market. I was right in my initial bearish breaker that I wanted to take, but I just took it too soon. I was too antsy. All right, so we are there. It wouldn't surprise me if we retrace here and not touch this line here, not touch this, or jab in here into the liquidity above this weekly high. But I mean, obviously it could, because of how bullish we are, and because it's so early in the morning. That's a good sign that we could see a potential reversal, or if we don't get the reversal, we could see just a strong continuation. If we see a strong continuation, it makes sense because we got this low resistance liquidity that's sitting above us. If I go to the daily, look at this. High, 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 all-time high. So it would not surprise me if we run that. So that's why we just got to be very careful on our analysis to make sure we're not just thinking trying to make a short work when it wants to go higher. I want to see strong displacement. Yeah, so going back to that inversion strategy there, Honey Roy, my suggestion is to go all in on ICT and understand the concepts and know how to read price. He has a ton of videos where he does lives and he just reads the price as it goes. That is the biggest value you can learn, because you need to be able to do that just like I'm doing it here. We have to be able to do that. Now, for example, what did I say? I said it wouldn't surprise me if we retrace here and don't hit that high. Why do I say that? Because I've freaking seen this like 1,000 times. I've got in thinking, oh, we're going to hit it. I'll get in along right here just for a quick pump, and then it turns on me. I've lost so much money doing that. Now we're hitting some order blocks. This is, if we're going to do it now, this is the time that it would do it. We still got 8 minutes. I'm going to use the restroom real quick. I will be right back. it looks like we're still dropping. Good morning, Raul. I'm going to do a test to make sure everything's working here. Okay. All right. Yeah, screen time is literally one of the most important things. It's because you just need to be able to identify and see what's going on. That over time you'll get better at it and be able to recognize patterns and signatures in price a lot more because you've just seen enough of it over time. 'I can use more screen time, and I've been doing this a long time, and I've spent hours in front of the screen. Probably hundreds of hours. Lots, lots of hours in front of the screen. Two minutes till news. No, zero predictions. I mean, my prediction is we could take out these lows here and then pump. Or we could just pump up into this area here. Because anybody in a long right here, it could shoot down and then go higher and then knock people out. It would not surprise me. Now, that becomes less likely if we get above this breaker right here. But we got to get above it. And that doesn't seem to be happening. I would love to see this not broken. I would like that to be a market structure shift. 12 seconds. So we wick below it. Now we're going to drop below the market structure shift. We're going to drop harder, it seems. All right. So we might leave that for right now. That makes it a lot harder for me to want to go shorter if this, in fact, is going to push lower. Now, if we completely retrace right here, that is it's very interesting. I want to see this right here hold though. This is a bullish order block right here on the 5-minute. So see how, I mean, look at that. Like, the idea is you don't know what's going to happen with news. But I would love to take a short, but I mean, unless we close below aggressively and then come back and touch this, I may use that as my short. We just hit this 5-minute fair value gap. Yeah, I mean, everybody's probably thinking, Honey Roy, that we're probably going to hit this high. So everybody's in long, and it's probably just going to collapse it. So I'm looking right now then, since we haven't hit that high, I like this for an inversion play. We break above this line, I would consider going long here into the previous week high, because that's the draw on liquidity in my mind. We literally stopped 2.5 handles, 3 handles below it. So it just doesn't surprise me if we just blow through this breaker and play the draw on liquidity. That's why I'm playing the draw on liquidity. I'm not playing the breaker. If you look here, we have a higher time frame. It looks better on the 15-minute, but here's on the 5-minute since it's on my screen. We have a low, a high, a lower low. We break through. This is the breaker. This is a full breaker on ICT. He'll take both candles. I typically like to do the first one, but we'll see where this closes in 1 minute. See if we close above this or not. This is a breaker. Bullish breaker, that is. You know, when I look back at my how I started out trading. I wish I started out with a paper account. I didn't. I gambled, and because of that I lost a lot of money, and it's definitely not the way to do it. So if you're looking to start out like Honey Roy did, start out with a paper account. Use self-control and keep yourself from trading real money. Your primary goal should be education, not money. Right now. Alright, I like how aggressive this is. How big is this box? That's 11, almost 12 handles. It's a large stop loss, but it can work. Excuse me. Yeah, this is a market structure shift, but I'm not quite confident on that because we did not hit buy side. I'm leaving it there, but I'm not a fan of it. Probably not going to let me see it. No. Yeah, I don't see why. Even if it was, we played this as a breaker, we didn't come up to that level. We came up to the fair value gap, so I wouldn't have taken that anyway. You can, there is an entry model where it doesn't have to come up to hit this breaker, especially when you have a fair value gap here. It can do what we talked about earlier, an institutional order flow entry drill, hit that and move lower, especially if it's aggressive and it's trying to get to a place on time. Going back to the 5 minute, that 5 minute closed above the breaker. We still got a minute left on this next candle for the 5 minute. Let's see if we retrace here. For those of you just joining, we just had news that took place on this large candle. Now that news took place, we're open. I'm free to start making trades. I'm looking, my trading model is a breaker, however, which is a high, low, higher high. We break lower. I target this mark or this level of liquidity. But because because I don't trade breakers, the pattern, I trade liquidity, and the breaker is my entry model, we didn't hit this high buy side here. We didn't hit that. So I am bullish. I have to wait. I can't take a short unless we hit this. We could leave that and we could get a solid breaker setup, but it's more suspect for me. I'm less convinced on it. I've taken trades like that, but ultimately we didn't get our setup yet. We wanted this line to be hit, which is the breaker. And right now it's just heavy and we're dropping. Sorry, I've been missing some of your guys' messages. He's talking about screen time. Yes. Absolutely. This is for Matt. Sorry, I missed your question. This absolutely could. The problem is a market, your high, the high that it goes towards has to be a logical high. That logical high is this black line, which is a weekly high. So if that's not hit, everything here I'm second guessing and I end up missing the play because freaking it should have hit this level, but it didn't. That's why I agree. This looks exactly like a beautiful market maker sell model, but it did not hit my target. So therefore, if I'm trading with a set of rules, I have to follow those rules. And I say this like I'm an expert in this, but the truth is, guys, I've struggled with following my rules for so long that it's just like every profitable trader, big trader out there talks about how rules are everything. So if that's the case, I have to become very good at following my rules and being willing to miss out on an opportunity. That's just the truth. Now, what you can do is you can start taking this model, okay? So we have a market maker sell model that just happened. 9:30, more than likely, we're going to hit the sell side based on what it's looking like on this 1 minute, okay? So let's talk about how you can learn from this, what you can do moving. Sorry, that's not a market structure shift. I just want to call that sell side liquidity, okay? Here's the thing. You can take this right here and you can start putting this in your notes. Take a screenshot of this, annotate it, talk about that this is a 1 hour, this is the liquidity that we were wanting price to hit, and put this in your notes, in your journal. And then go back and back test how many times this has happened. Has this happened so much that you can actually make a model off of this? Maybe, maybe not. That's where your work as a day trader comes in, to do the education, get the learning in, back test, solidify a model, and this could be a model. You could take this breaker off of it going short from this area if it's a higher probability and you back test and the setup is legit. So I just haven't done that, and from the screen time that I have done, it not hitting and then retracing it's 50-50 in my book right now. Now, I haven't done a ton of back testing on looking at this specifically, but that is what you could do to see if this is a model you could take. So to answer your question, Matt, this is a market maker sell model. We just have to look at it in the context of the higher time frame in a higher time frame market. We look at here. This is a 15 minute. Okay? We have the 1 hour right here, but then we have this wick right here. This is the 1 hour fair value gap. But here we have a wick right here. So let's go to the 1 hour and see what that looks like. So look at that. Look at the 1 hour. We even have this wick in the 1 hour. This weekly wick. And it tagged into this 1 hour, already using it the first time. So typically the second time that we see a tag into a fair value gap, I want it to run these highs. Going below here is not a sustainable model in my book, and it's not something that I personally would trade. So we never hit that level. We left 3 handles before there. So I'm still waiting just to see how price plays out. Now, if we look at the hour and continue in the hour here, look at this. We have this order block right here at 8 a.m. And we could turn right here and we could go the other direction, and then we could hit that previous week high. So I need to see strong evidence that price wants to move lower, and I can't personally, in my own rules and just trying to be a good trader, can't go short without hitting that previous week high. So that 15-minute breaker did not hold. That is a bearish sign. ICT talks about you want to look at 3 discount PD arrays. You want to find 3 discount PD arrays that are violated. So on a higher time frame, we have this one. We have a breaker. We have a fair value gap that was violated. The last one in my book is going to be this order block right here. If this order block is violated on the 15-minute, that tells me we're probably bearish and we're closing below this level, and I would say that is a bearish signature. But even if we close below this, we could still retrace 75% and go higher and then continue lower. Just because we close lower does not mean that we're just going to collapse. We could close lower, violate this, signaling that we are bearish, and immediately it could look bullish. But it's bullish because it's suspect, it's rebalancing an imbalance, and then it could continue lower. All right, so see how we closed below. Let's go to the 1 minute here. See this 1 minute fair value gap? Usually, if you go back and look at yesterday's price action, I'm not going to do it. I want you to do it. Go back and look at yesterday's price action and find the lowest fair value gap in each leg. A leg is from a swing low to a swing high, then a swing high to a swing low. Those are legs. So when price comes back down, if you look at yesterday, it would hit these fair value gaps and then turn and run the other direction. This one broke through it. If it breaks through it, it should be running for this swing low, but it's not. It's consolidating here. What does that mean? For me, it means that it still wants to go higher, but I just need price to show that it wants to go higher. Now, what would I think would be really cool? We have this swing high right here, and we have this sell side. If we grab sell side liquidity right here, and then we do have a market structure shift right here, I would be interested in a long. I am not interested in going short on a fair value gap, doing an inversion, because of it would have stopped you out. We do have TGIF. That is true. I just know that TGIF is a model. It's not liquidity. I want liquidity to be ran, and then I would have been looking for that. I did have that in mind. I just would not. I just can't do it. I have this fair value gap marked for an inversion for us to go higher. Yeah, this pisses me off that we didn't hit that high. It makes the rest of the day just feel like you have major FOMO, missing out on opportunities. That's the truth. Sign of a good trader, and this is what I'm telling myself. A sign of a good trader is being willing to be patient, even if when you don't have your targets hit and a giant move takes place. Okay, so right now we ran sell side liquidity right here. I would love to see this closed above. If that closes above, I would entertain a long right here. That would give us 10 handles approximately. So obviously, the closer we get to this high right here, the lighter I would want to go, because this is a large fair value gap. If we go down to the 1 minute, it's a little bit smaller, but you also have another fair value gap that's sitting right here. Midnight open, I mean, it could be targeting midnight open. It's sitting right down here at 217. The only thing that I understand from ICT on midnight open is if you're bullish, the most ideal place is to buy below it if you're going long, and if we're short, you want to buy above it to go short. So I only really care about midnight open. I don't use midnight open as a draw on liquidity. Price moves for only two reasons. It moves because of liquidity and imbalances. Those are the two things, liquidity and imbalances. So midnight opening price is not liquidity and it's not an imbalance. It's a reference point that the algorithm uses to move price up and down, but it doesn't generate liquidity. Swing highs and imbalances are that. I really want to see. I really want to see this go. I really want to see that go. I mean, you could slap this twice. So you could slap this by playing this inverse to the high, sell that, let it go a little bit higher, come back down, hit this breaker, this bullish breaker, and then take that breaker higher. That's a potential scenario that I'm thinking about in my mind that I would love to see play out. When you play out different scenarios in your mind, it gives you the confidence when it actually shows up. You're just like, oh, I just talked about this. This could be something that's happening. Let's take a stab at it. It does not look like it wants to go higher. Man, that is disappointing. I gotta put on some I've got music in my ears. I guess that's good. Let me do it so you guys can hear it. Okay, so there's nothing there. Looks like we still want to go lower, guys. Still wants to go lower. There's just not an entry model for me here, especially now that we've completed a market maker sell model. If we put some extensions, Fibonacci extensions, ICT does this a lot. And he talks about it running to usually around 4. That's where we're sitting. The only breaker here that you could see, since we were and I missed this is just me learning as I'm going, is we got a high low, we got the highest high. This could be considered a breaker right here. That could have been a breaker. I didn't see it, so that's why if I would have saw that and I was analyzing it, understanding how heavy it was, I may have considered that. I didn't see it. So this is stuff that I put in my journal, or I'm going to evaluate on my when I track all my breaker setups, that this is something for me to study and understand. We completed a market maker sell model. Excuse me. And we came up into that breaker, respected the 50% or the consequent encroachment of this fair value gap right here, and we moved lower. That would have been a legitimate entry. We would have had resistance with this bearish breaker, right, or bearish order block right here. And it moved lower, and it moved lower. So that would have been an option to take. I just didn't see it when it was playing out. I was really watching for the inverse here because I wanted it to run towards these weekly highs. So not sure if we're getting a trade today, but if you like this commentary on looking at the market, give me a like. I would appreciate that. Put a comment below. Let me know your thoughts. Subscribe to the channel. Maybe be doing more of these. Probably not every day, maybe twice a week, 3 times a week. So right now it's 9:30. The next macro begins at, or excuse me, it's 9:30. That's my time. Right now it's 10:30. The next macro is going to be beginning between 10:45 and 11:15. Really, quite often I'll see lows formed on the half hour or the hour, or within that 30-minute time frame of the macro. So between like 10:50 and 11:15 or 11:10, you can see lows made. When was this high created? See this high? It was made at 9:50, 9:49. When was this low made right here? 407. When was this low made? 858. So my point is, you can, very common, you'll see turning points happen at the top of the hour. That's kind of what I'm waiting for right now. because I'm still bullish on the day. I want that to happen. I will change my bias based on how we react to this again. If we can't get through this to go higher, then I would say we're bearish on the day. Let's see here. All right, look at the 15-minute. Here's the 15-minute time frame. Why do I? Okay, so my cursor, this box right here, is that overlapping, is that fair value gap where the breaker was. So if we could come back up here and touch here and still be bearish, we would have to get through this box, through this fair value gap, to be bullish. So we can have a retracement and still be bearish. We got a 30-second right here. We could target these equal highs. Let's see where this closes. I may consider taking this. Let's see, so we did inverse this 30-second, but we inversed it here. Yeah, I'm not interested in this. It already broke here once and didn't go. It could go right now, but I'm not interested in it. Got equal highs on the 1 minute. Yeah, this is probably going to work out. It's probably going to hit right here towards these equal highs. Low, high, lower, low. We broke through this breaker. So this could be a 30-second. We have an overlapping order block and a fair value gap right here. If we get a stab down into this breaker right here, I'll look at taking a light long. Meaning I'm trading with micros. Did it hit yesterday's close? We have close was actually, let's do this. Let's see what it is with the regular trading hours. So regular trading hours was right here, so we went below it. We filled it in, and we're sitting right there. Slipping in my chair. So right now I'm going through different time frames, making sure I'm not missing anything. A 2 minute. I like this 3 minute. If we close above this 3 minute, that's interesting. As long as we don't get too high. Yeah, see how we turtle soup this right there, right? Midnight open. Look, it did target that midnight open there, Honey Roy. Just, that's insane. Just bloop. And then other direction. Isn't that crazy? So, we got 2 minutes left on this 3 minute. And we did not close on the 2 minute. 4 minute, there's nothing there. 5 minute, there's nothing there. So we're looking at the 3 and 2. I also have the 30-second breaker marked out. This is very aggressive. This, I mean, you could chase this. This is not a bad chase. Chase it towards this highs, but we could retrace. You just got to be okay with a potential deep retracement. There's 19 seconds left. Here's 2 on the 2. Still got a minute 30. This is what happens all the time. It'll do that. So and like I said, we're just targeting this high right here. 36 seconds. That'd be crazy if it just goes all this way and then closes in 20 seconds left. This is why we wait for closes. Oh, look at that. I hate when it closes by a tick. Okay, closed above. Alright, I'm going to take an entry there. I'm trading off screen, but I do have an entry. I will close if we close below this 3 minute right here. You could potentially still see a wick down into this breaker, which wouldn't surprise me. This is where you'd want to take. That's what I wanted to wait for. This is what happens when you try to find something happen. Right here is, to me, the ideal entry that I wanted. So I'm going to have to close my position. Let's see how this closes right here. I want to see how this 30-second closes. See that, how it's respecting? Let's see if it closes. We got 7 seconds. That's the breaker that I wanted. That's what I was originally looking for. See how it overlaps right there? Let's see, this 30-second, this would be a confirmation if we close above this right here right away. See how we have not closed on the 3-minute yet. We did not close on the 3-minute yet, so I am still in this trade. This is a good sign. I really like this candle right here. As long as we closed right around the consequent encroachment of that. I would call that overall respecting it. We could still see a wick lower, but I want to see a push higher. As soon as we target this high right here, I will be moving my stop to break even. So the 1042 candle in the 3-minute, let's go to the 1 minute. So the 1043 candle, I'll move my stop to break even. Two minute is invalid now. The 3-minute is still, we got a minute and a half. I really wanted this to push now. We're going to be mechanical on this. We're going to wait till this closes. Interesting. I have, what, 3-4 people left while I'm in alone. I would assume people would want to see how it plays out, whether it's loss or win. I got in right there. That was my long. That's where I wanted to target 15 handles. So right now I'm still in drawdown. I'm not liking this price action. I wanted it to go before. All right. Let's see what's happening here. My last line of defense is this 30-second. I want to see this. Got 4 seconds to see where this closes. If we close below, we start closing below this, I'm gonna get out. This is not good. Okay. Let's see. Yeah, we're gonna close our account there. Not our account, but we're gonna close our position there. The chances of it coming back up here in a minute, I mean, chances of it coming back up here by the time, let's see, what do we got? A minute left. Let's just see if I saved myself. Yeah, looks like I saved myself. Now there's the official close of the 3 minute. See that? That is just not something, you can't hold that far. So you got to find somewhere else to cut it. I know. That's what makes that's the hardest part on this, is it not taking out the highs. If it took out the highs, my friend, this would have been a different day for me. This would have been my first entry to go short. I would have gone there. Probably would have wanted it to hit this, but if you look at here, we got 1, 2, 3, 4. That is where I would have gone. I'm watching this right here. I see a 4 break above it. All right, let's see here. Come on, I want to see this go. All right, let's see if we close here. All right, gonna do a light long, small. All right, I want to see a pump right here. I have a tight stop. I'm gonna do a mechanical stop because this is too large of a stop loss. So stop loss will be below this order block right here. Come on, let's pump right there. All right, I'm gonna bring stop to break even. I'm gonna take 1 micro off there. We are still in this long. That's looking good. I'm gonna take a micro off there. Still have my stop loss to break even. And it looks like I'm going to get tapped out right here. I'm going to close it there. All right, so took that. Yes, it is. Yeah, there's another market day. Again, I was taking micros. I mean, what did I make? $40, $50. Hey, green is green. That brings me back to about break even. I'm just watching. I'm watching to see if we actually respect this fair value gap. You could see this still respect it and move higher. I mean, I'm not in the trade at this point, but Raul, are you still in here? How long you been trading? Oh, now we're pumping. That's a good sign. How long you been trading, Ro? You got a small fair value gap right here, right below this bearish order block. If we're gonna get, we need to get through that. We have not closed above this 5 minute, which is, here's what I expect to happen. As soon as we close above that, I bet you we explode. Look at the 15 minute, how the 15 minute has respected the midnight open. This is the 15 minute right here. There's the midnight, we've wicked below it, wicked below it, wicked below it, close. I mean, this is bullish signature in price. I've also respected this 15 minute for the most part. It closed a little bit below it, but that's okay. Got 2 minutes left on the 5 minute. Got equal highs right here. Those will be ran. Those will be ran. Nice job, bro. I really do believe this is our fake move. This is the fake move to the downside. This is the manipulation leg. And I think we're going to have a PM session that moves higher. I could be wrong, though. Got a minute left on the 5 minute. $17. Let's see if we close above this or not. There we go. Then it's probably going to move here. I could see that now moving to go higher, to run these equal highs right here. Closing above that 5 minute. See how it waited for that 5 minute to close and then it now starts moving? So there it hits those equal highs. That's if you were holding that, I would scale some or sell it at that high. That close of that 5 minute was nice. I'm not gonna lie, I did take that. I did a couple micros. When you have a 5 minute close and we've been just sitting around here, it waits for that close, and then it was just let's see, what was that, 29 to, so it was a 7 handle move. So a small win there. But see how I sold once we broke this high right there, and now we're retracing. that's why. I was logged into the micro account because I wanted to show you my my executions. I can't drag screens, so I forgot I'm not logged into the account here, so it's not going to work. Sorry about that. I was going to show you guys. I like this candle too. I like this candle. Let's see if we close above this right here. I am not in anything. Reversal 1130. I mean, we may have already had our low, and this, look at where this low's at. It's at the top of the bottom of the hour, or top of the hour at 10:55. So I wouldn't be surprised if this is our low for the day, or not the day, but a low. All right, so we just had the 1 minute close above this. We have an order block right here. Let's see how it reacts to this order block right here. I would like to see it respect at most the mean threshold, which is about right here. Especially since we closed above that 1 minute. I'm not in anything. It just seems price wants to continue to just... Let's see. It depends on where we close. Alright, so we did respect the mean threshold. Oh. Yeah, it wants to barcode right now. It's just... It is not wanting to be aggressive at all. Not surprising. I mean, after this giant drop we had, I mean, it's probably going to take some time before it wants to run back towards the previous week high. I would love, for those of you on stream, I would love your feedback as far as what you liked, what you didn't like, areas of improvement. Not saying I'll do all of them, but I do care about what people think in regards to their experience online. Whether you're watching this right now or you're watching this after the fact on replay. Just creeping. It's just creeping right now. Actually, you know what I'm thinking of doing? I would like to add like confetti type animation in case for wins, just to something that goes over the screen. Let me see here. Canva. Falling money, right? Like right. Let's see. Is that a picture or is that a video? Like something like this. I'm thinking of doing. Where are we at? Something that has money falling like that, and then it would overlay with the video when we have a winning trade. I think something like that would be fun. Not bad. That could look good. You could put some money in there with it. Like that. Stacks of money. Like that. I don't know. What do you guys think? That's what I think I'm gonna do. This is. Let's see. Yeah, I think that would be cool. That'd be fun. 5 seconds long. Why not? Let's put this on there. Let's see what happens. I need transparent background though. I need to make sure that is included. Let's see what happens. All right, let me see here. I'm gonna see if I can upload this. I'm gonna add this here. Media source. Still just barcoding here. I would like if we grab the liquidity underneath it and then pop higher. That's the only type of scenario you'd want to see. If it breaks anything lower than this, it might continue lower. It has a white background. Dang it. I'm just waiting here, guys. I'm seeing if I can create a money falling from the sky animation for my live streams. Let's see what happens if I do that. That's a nice wick if it stays a wick. Yeah, that's actually a good point, Raul. This is time distortion. Time distortion happens all the time. When you start getting this barcoding, literally it's just waiting for time. This is really bad price action. This is really bad price action. There is literally nothing that interests me. And the ones that I did take were legitimate setups, but just because of the bad price action. I really want it to hold, Honey Roy. I want it to hold because I want to see higher prices. That's what I would like to see happen. And to be honest, like my gut feeling is, we look at this 5 minute. This just could be a higher time frame move. It's moving. It's gonna consolidate down here before the move higher. I'm curious on this here. If we take that as the low, or let's just go midpoint of where it's at right now, from this point to this point, it could go all the way to 1 o'clock. to start making that. It could take all day to get up there. You could consolidate all down here, and then, you know, the final hour of trading, just pop. You can't make a trading model off of that. That's why you have to find those safe base hit wins. And today I have 3 accounts that are $200. So I'm not going to trade anymore unless something's screaming my name. But that, I just find that the more I wait till, the more I trade into the afternoon, the more profits I lose. That's not going to work. Oh, it worked. Hey, look at that. Oh, man. So where is that? Oh, no, that's not it. Let's see what happens if I push it again. Okay. Hey, look at that. We got our money making animation. That's me making it in like 30 seconds. Maybe we'll make something a bit nicer. But that's fun. Money, 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 baby. Big money. Hold in for the money. I mean, that's the only reason you trade, guys. You don't trade to win. You trade for money. You don't trade to win. You trade for money. What do I mean by that? People will trade to win because it feels good. They don't like to be wrong. So when they do have a win, they feel great. And what does that feeling induce? It induce confidence, pride, that they can make more money. Oh man, that was easy. I'm going to do it again. And they are trading based off of the feeling. They feel empowered. They feel unstoppable. They feel invincible. That's trading the feeling. You also, the other thing happens too. You lose. You're like, oh, I got to get this back. You hate that feeling, so you want to get it back. So you trade. You don't trade based on your feelings. You don't trade for the wins or to get out of the losses. You trade for money. For me, that means when you have money, you walk away, because that's the goal. You walk away from the high. You're willing to say, I'm done. When you're in a loss, you're willing to say, I'll come back tomorrow and I'll try again. You have to trade for the money, not for the feeling. And this is a biblical principle that the Lord has been teaching me, right? Pride becomes before fall. Like, you cannot allow that pride in your heart to set in, to think that you're confident, you're talented enough to win. You start trading worse when you overtrade. You start trading worse when you think you got it all figured out. You can't. You can't trade that way. So there is biblical principles that have helped me establish, and one of these I'll probably get my list out and actually walk through some of them with you guys. So I can't think of a lot of the ones that have impacted me. I have them in my journal. But I know that I can win. I know I can trade, and I know I can win. You just got to come against the lie of the enemy that tries to tell you you can't do this. I mean, because everybody has that liar on their shoulder, that negative self-talk, trying to tell you that you can't do this, you're not good enough. You have to follow biblical principles. What does the Bible say about you? One of the big ones for me has been 2 Corinthians, and I think it's 9:18. That's a nice drop. 9:18 said, 2 Corinthians 9:18, it might be 1st or 2 Corinthians. It says, in all things, at all times, having all that you need, you will abound in every good work. Well, this is a good work for me and my family. I know the Lord's asked me to do this. So that's his promise to me. So when I feel that negative self-talk that, oh, you can't do this, you need to keep going until you get out of that drawdown. The Lord has already told me that I'm going to be profitable doing this. So I have to walk the walk even though I may not see the end result. You know, I'm not a millionaire on this. No, I haven't made hundreds of thousands of dollars, but I've made thousands of dollars. And I can do this. So I take and hold on to his promise. Despite what my circumstances tell me, despite what I may want to believe or what is obvious to me, I have to stand on his promises. And his promises are that one thing. No, the midnight did not hold. Midnight did not hold. We ran these equal lows right here. Equal low here, or relatively equal lows. I tell you what, this right here just irks me. That irks me. So much. No, I don't think Matt is on anymore, Raul. He may come back. But that right there, man, I tell you what. I may go back and test this because I have seen this happen a few times, and credit to Matt. Credit to Matt on calling it out and bringing it up into the conversation. Because I have seen that happen before, where it stops right before it, and then it runs the other way. I mean, look at the daily. How often did it run just below the highs and then continue moving lower? But the thing about it is look at the in between these days. So you have the high, you have this high, and then you have a lower high. Well, if you go on the same, let me zoom in here so we can get. So we're talking about taking that short, but even when it did not hit that previous week high. So the idea is well, can I go short even though it doesn't hit that high? Well, theoretically, the answer is yes. So it came all the way up here, and then it closed down here. So we go from this high, 618, it closed at 480. So that's over 200 points from that high to that low, and this is on a daily chart. So that's the truth, is it does work, but look at in between here. We ran the previous day on this one. But the previous day we did not run. So we still grabbed liquidity here. but not here, and respected that high. And if you guys haven't figured out, I'm a verbal processor, so I'm processing what I'm saying to you right now because I want to figure this out. Then we look at this one. So here's our high that didn't get this high, but broke this high from the previous day. Then we have a lower high, and then another lower high. But then this day, April 1st, we break through the previous 2 days high, but we respect the 3 days back high, and we did not run that one. So we still ran liquidity here and grabbed liquidity, but we did not grab it at this point. Same thing here. So we got a lower high, and then on April 4th, we run these two highs, don't run this high, and we drop. That's 568. The close, that's almost 450 points from this to there. That right there is something that needs to be taken into consideration, is that we may run a previous day liquidity, but we could not run a higher liquidity because we already ran a previous day liquidity. So let's take that concept and let's look at today. Let's see what happened today. Okay, so if we look right here, we ran this liquidity, and this liquidity of 3 previous days, and we did not run that one. Do you guys like this? I mean, this is for me right now, but you guys get to come along on my analysis here. So we have our previous day here. Let's see, we are on May 10th. So here's May 9th's high. May 9th, we ran yesterday's. We ran that day. So we did run previous day liquidity, and we did it in the London session. We did it in the London session. But we did not take a week ago. It doesn't mean it still can't be ran. We theoretically could have taken this out and not run these right here. You see what I mean? So we could play both sides of this with looking at the daily chart. Let's go back to the daily here. If we go with this same trend that's happening, which I like the idea of breaking trends more than running with trends, is that we have respect, break, respect, break, respect, break. Here, if we go from this high, respect, break one, or we broke two, then we broke this one and this one, so that's two. The next day we broke one, previous day high. Here we broke previous day high. Here we broke previous day high but respected this high. Then we drop, run that low, then we break 1, 2, 3, 4 highs, previous day highs. So I'm not seeing a guaranteed pattern here. But I know TT Trades talks about his next. He has a video on the next day model, which I think I might look at and see how that compares with this, because I think there's something to say about running some liquidity and not running others. Just got to figure out what it is. All right, look at that. That's a nice move. We did not run that low. We did inverse this. I would not have taken this because we did not grab liquidity here. We did grab this liquidity, so it still is a legitimate setup. I just, with knowing how price has been, I want to see this actually play out. We did, before I look at taking another trade. So we got a low, high, lower low. That we have a fair value gap that overlaps right here, but the breaker would be right here. No fair value gap on this side. Balanced price range here. There's technically no reason for us to go any lower than this. And we're about to enter the lunch hour, right? Yeah, we're about to hit lunch. Let's see what happens. So low, high, lower, low. So this would be the high. Honestly, what I would want to see is it come down here, touch it, and then there be a fair value gap right here left, and we inverse it to go higher. That's what I would like to see. And the noon is going to be the beginning of the fourth quarter, which for today would be the distribution. So let me put this up on the 15-minute chart here. So here we have our price action for today. Here's opening price for today. Here's closing price broken into 4 quarters. This is our true open at midnight. And here we have our A, our accumulation. Here we have our manipulation. And here we have our distribution. So now that we're going into the fourth quarter, the fourth quarter can either be a continuation or it can be a reversal. I'm biased for the reversal happening, and that's what I'm going to look for as a move back up this way. But you could see a continuation lower. We just need to see which way it wants to go. So we've had our accumulation, manipulation, distribution back lower. Now let's see if we want to push higher into the previous week high. Yeah, we're about to hit that lunch hour. I'll be right back. I'm going to use the restroom. Oh, we're still winning money. Still winning money. I thought I was supposed to stop. Oh, every time I apparently go into that screen, it's going to do that. All right, so we have the lunch hour. It's noon. I would love to see it come hit this line here and find some resistance with some aggressive candles, and before we actually hit these highs and move higher. That would be nice. Because if we go down here and then we consolidate for one candle, we leave a fair value gap, I would play the inverse of that fair value gap. So we just ran liquidity on these two small equal lows. Ooh. All right, let's get another push down. Do not, I want to leave that open right there. We can go to the 2 minute. Let's see what the 2 minute looks like. 2 minute looks really good in the sense of it has a nice fair value gap. So low, high, lower, low. We don't have a fair value gap here. Let's get rid of this 5 minute. That's irrelevant. We have a tiny fair value gap, but we don't rebalance it. So that's no good. About 30-second. I like this candle here. That's a nice candle. Close there. Sorry, my wife just walked in. I need to see this hold before I'm doing anything. This could just drop. I like it finding support right here. We have a BPR. We have our breaker. We're in the lunch hour. We need to run liquidity. You could run this liquidity down here, but ideally I would like it to see run this liquidity the other direction. I want a swing low made, so we have 13 seconds and we'll have a swing low, and then I would like to see this inverted, an inversion of it. This is too big of an inversion in my book. I mean, it's a 2 minute. We would have to wait 2 more minutes here. Is there anything on the 5 minute? The 5 minute looks just nice low resistance liquidity here. Maybe we can do this. Let's keep that. Yeah, that makes it. All right, 10 seconds here. We made a lower low. So now I'm waiting again for a swing. Let's see if we're closing below this. All right, so we closed below this breaker. Makes that breaker invalid. So not really interested in that anymore. We could find support in this BPR right here in this fair value gap. Here's where equilibrium sits. From that swing low to swing high. That's where price will potentially want to push towards, as long as we are not looking to go lower. Looks like we want to go lower. I mean, dang. Let's see if we inverse this here. So it doesn't inverse this. You technically still could find support here and go higher. It's lower conviction because we didn't respect the consequent encroachment. We actually filled the entire breaker or the entire fair value gap. That's just not the signature in price that I want to see. We have a high, low, higher, high. Let's assume we're bearish. If we are bearish, you'd want to see price stop here or here. And if we're pushing through that this is a sign that we are bullish if we're pushing through this. Let's see what happens here. Look at that. Look at it holding right there, at least for this candle. There's just too much I seen in price that wants to say it wants to go the other direction, wants to go higher. I want to see this disrespected. I want to see it violated. Nothing. You missed absolutely nothing. I do have a bearish breaker I want to see violated. That tells me we could run for this low resistance liquidity here, 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 and here. Let's see what the 2 minute looks like. 2 minute, that's a nice right there. See, from that 33 to 40, not quite 10 points. All right, we're going to close that account. Tyrese, how you doing, sir? Thanks for joining. I don't have an answer for that. Right now, what I'm doing is live streaming. I am eventually putting together a training course for ICT, learning ICT concepts. But I won't be doing any one-on-one mentorships of any kind. But you're feel free to ask any questions you want here. I'm happy to answer any of those questions. Now that we're getting into the day, guys, I'm going to probably have to mute you guys while I take some phone calls because I do have a job. We're going to make this call here. I do like this, guys. If it does break this level right here, you can target that. But because I'm taking a phone call, I probably will miss it if it goes. Okay, back here. Alright, got 56 seconds left. Let's see if we can stay below this swing high. If we break this swing high before, then that would make an invalid entry. Looks like it wants to do it. Looks like it wants to pop. If it does, this is a breaker right here. It's a breaker that goes into a BPR. That's good signature and price. All right, so did we make equal highs or did we? We made equal highs. Okay, so if we retrace down into here, you could use that as a potential entry. Now, the reason I'm not too interested in it is look at this. Up and down, up, down, up and down, up and down, and we're still within this. So it could easily just go all the way back down here. I want to see an aggressive candle, grab some liquidity, and then come back down to this breaker. That's what I want to see. So this would be your tag for the inversion, especially since you got equal highs. it's likely to run those, but like I said, we're in consolidation. I'm not interested in it. I like that close. Respecting it. That's a good sign. Again, we're watching this, seeing, we want to just see I would like the lunch hour to start moving higher. That's really what I want to see, is the lunch hour to begin to move in my direction. So I can use this as a breaker. That's what I would really like to do. We're on a 2 minute. Didn't realize that. What does the 1 minute look like? I like the way the 2 minutes looking. There's a 3. I like that candle there. Let's see if it keeps going here. I want it to be aggressive. I want it to clear this out in one candle right here. I want that to clear out. If it can't, then it's just still in consolidation. There it goes. Keep going. Clear it. Come on. 25 seconds. Tap it. I want it to move higher. There we go. Let's keep going. There we go. Keep going. If we do that and we keep going above that, that would give this as a potential breaker. And we're in a new session, so we want to see this price. We want to see these levels hold as we move higher. So I like that. I like that idea. But we got to continue. We can't just wick and then come back. No wikis. Wicka, 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 wicka. What do we do? We make equal. We made. We tagged it by a tick. By a tick. My goodness, just an unwillingness to go higher. I'm talking about the close of this candle. Look where the body closed. That's just irritating. Let's see where this next candle goes. We do have a fair value gap, an overlapping fair value gap with this breaker right here. We did just tag into it, so technically this would be a long, but I like to see it leave, then come back to it. That's why I'm not really interested in it. I think I'm going to be done for the day. 12:30. We're going to be done. I'll do some next week. Thanks for joining, guys. I appreciate it. Thanks for watching. Thanks for hanging out with me. Day trading is definitely funner when there's somebody asks questions and we can talk to. So we will see you guys in the next one. Take care.